For the time being, let's focus on DMart yet again. Remember, they're in focus on the back of the Q3 earnings. The revenue and the profits were up close to around 20%, but the gross margins is a tad lower due to deterioration in the mix. Suvarna Joshi, Senior Analyst, FMCG Axis Securities, joins us to run us through a quick analysis on those numbers. Hi, Suvarna. Morning. Thanks so much for joining in. Well, what would your view be on the stock? Valuation-wise, it's not cheap, but how would you approach the stock from here? What's the official rating?
Yeah, good morning, Nigel. So on DMart, which announced its results on Saturday, the valuations, like you mentioned, are clearly not very attractive enough to kind of enter to the stock. The company's sales per square feet are still 8% below the pre-COVID levels. And in Q3, the sales per square feet number has come in at about 40,000 odd rupees per square feet, as against, in Q3 FY22, it was about 37,000 versus Q3 of FY20, which stood at about 40,300 odd rupees per square feet. So there we can clearly see that the mix has not yet started contributing to the overall revenue profile, and likely so we are seeing that pressure on gross margins as well.
So when you say pressure, I mean, even the management alluded to that there's pressure on gross margins. How much do you think the pressure could be in the second half of the year? And what is your view on the stock now, considering these sky-high valuations? Do you expect, the stock to sort of underperform? What's the target for the year end?
Yeah, so Sonia, we do think that gross margins are continuing to be the way they are right now. We do not see too much of a change from these levels in this coming quarter as well, because we see the impact of the third wave of COVID that we are all going through right now is quite uncertain, although it is not very fatal enough, but certainly it has pushed back people from going out, and therefore we do think that footfalls could likely be a little lower, and there is quite a lot of uncertainty in terms of the local restrictions, because every day they are changing across the states, right? So in that context, we do think that gross margins will continue to be in the band that they are right now, about 15.4 to 15.5% odd levels. In terms of the stock performance, surely the stock from its 52 weeks high has corrected approximately 20%, but it doesn't still give us that opportunity to kind of become positive and kind of add that stock to the portfolio at these levels as well.
Okay, then just one final question. Since you track this whole space, given what we've seen with DMart's performance, where gross margins clearly are under a bit of pressure, would you extend that to the rest of this space as well? And what would your top buys be? What are the stocks that you would avoid?
Yeah, so rightly so, but there are certain apparel plays where we see a huge bounce back in terms of the revenue profile because of the festive season that went by. And it certainly was a strong festive season, also backed by the wedding season purchases. So in some of the apparel space companies, we do like ABFRL, which is one stock under our buy coverage. Whereas in terms of the footwear space, we like Bata, which is again a very attractive stock to hold on to. And it also, at Axis Securities, it is one of our conviction plays in this space. On DMart, we continue to have a sell rating, and we will look for more clarity as to how things emerge and become more constructive going forward.
All right. Suvarna, thanks very much for joining us. Good speaking with you here on CNBC TV 18. Thanks,
Prashant. Have a good day.
Thank you. All right, we'll take a very quick break.